Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, May 1st, 6:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in a short-term trend. We had classic O'Neill follow-through days on April 22nd and 23rd. Check the trend gauge over here. We've got green arrows for market leadership. Short term, also green as the indexes are above their 21-day exponential moving average. Medium term, 50-day moving average. First close today for the S&P and the Nasdaq 100 above that level. However, the slope of the line is still heading lower. We've got the yellow arrow shifting towards neutral. If we get multiple closes and make progress relative to the 50-day moving average, we can slide that to neutral and then possibly to grow when the slope of the line turns up. All indices still below the long-term 200-day moving average. So we got the red arrow there as well. So what happened today after hours? Wednesday, Meta and Microsoft with well-received earnings reports, and those gains held throughout the day. So they led the S&P 500 and the Nasdaq 100 above the 50-day moving average for the first time off the low since this correction has started. Here are the numbers on the day. 20 over 21. We cut WGS yesterday because of that big gap down on earnings and didn't replace it. So for now, just 20. Average up 0.15%. So leaders mixed today, 10 up, 1 neutral, 9 down. The big eight was the big number. This is our the Magnificent Seven plus Netflix, up an average of 2.37% today, led by Microsoft up 7.6%, Meta up 4.2%, and Amazon up 3.1%. Amazon, however, is down a touch after hours on its earnings report. RG8, sorry, growth ETF composite up 1/3%. S&P 500 gapped up 1%. Late, hard, last 15 minutes sell off took it down to just up 0.63% on the day. And you can see the equal weight was negative. This is, again, a testament to the fact that the big cap NASDAQ names led the indexes today. NASDAQ 100 gapped up 1.6, also sold hard into the close, but still closed up 1.3%. Equal weight, however, up 0.35%. Dow, mid, and small caps all positive. We'll take a look at those when we get to the charts. Global 60/40 stock and bond up 0.11. Our flagship GROTECTION portfolio up 0.3%. Our TurboTection portfolio up approximately 0.27%. Let's get to the charts. We'll start off with the S&P 500 here. Let's go to a 5-minute chart. So you can see the big gap up, and then we based for about an hour today, and then broke higher. Pullback still held the opening lows, made two higher highs after that, about a 1 hour base off of midday there, based again into the close before just out of the blue, this hard sell off of about 3/4%. Maybe somebody tipped to the fact that no, that couldn't be it. But we are down after hours on the S&P and the Nasdaq due to the less than stellar reactions of Amazon and Apple. Apple has gotten worse as the conference call has gone along, and they've been talking about impacts of tariffs and unknowns for the last half of the year. So back to the daily here, you can see the gap up at close at the lows of the range, right above the 50-day moving average. So we've got the 8 up through the 21. Those are headed up towards the 50. There are some very high closes still in the 50-day last 50-day calculation. It's going to take a little bit of a while. I'm going to crunch some numbers overnight tomorrow morning, and by the podcast, we'll have an idea of when we can approximately see this slope of this line attempt to turn higher, provided we don't completely break down below today's lows and certainly below the lows of Wednesday and the 8 and 21. Of course, we need to hold above those levels too. So that's the S&P 500. Let's go to the equal weight S&P. first. You can see it still didn't touch the declining 50-day moving average. As we already mentioned, this was negative today. Not a surprise with the big cap tech names leading. Let's go to the NASDAQ 100. You can see the gap up there as well. We'll go to the 5-minute, very similar action with the harsh sell-off into the close. After hours down 0.72%. So that puts it at 478. The 50-day moving average is at 475. So still above that level. But again, we need to see this flatten out and turn higher and have the 8 and the 21 come up through it. And then, of course, right above there, we've got the 200-day moving average, which we eventually are going to have to get back above to keep this rally moving as well. On to the Dow Jones Industrial Average, still below the declining 50-day moving average, gapped up close near the lows of the day as well. S&P 400 mid cap, yeah, at the highs of the day was right below the 50-day moving average, and it sold off close in the lower third of the range as well. And the Russell 2000 closed about mid-range, still below the 50-day moving average. So those are the major indexes. Let's go to the VIX. VIX was actually lower on the day, down by less than 1%. So continues to trickle lower. The long-term average of the VIX is around 19.5. We want to see it get down closer to that level. That long-term level is about 1.2, 1.3% of ATR. We still have a very high ATR because of the big ranges on the S&P 500. While all the tariff initial reaction was getting worked out, very big ranges there. So we'll need those to come off. Let's see, 1, 2, 3. So those were 4 weeks ago. Those should start coming off next week, and we'll see some contraction in the ATR of the S&P 500, which is still currently above 3%. So that was the VIX. How about the US dollar? Dollar up on the day and trying to break out of this range. That's actually going to be a negative for US stocks. You can see it looks like the breakdown about 2 weeks ago got right back in the range, trying to break out of this range now. So that's something that we'll keep an eye on. Precious metals, gold indeed looking like a top, gapping down today and closing below the 21-day moving average for the first time since February. So certainly taking a break here on gold, and gold stocks also breaking below the 21-day moving average, down 3.7% on the day. Silver was also negative below the 21 and the 50-day moving averages. Onto bonds, broad bond index down today, meaning yields slightly higher. TLT, the long bond, down 0.5%, also means yields up on the day. You can see the TYX up 1.2%, and the 10-year up 1.29%. So that's our inter-asset correlation. Let's go to the tail of the tape. New sentiment numbers out today. Well, first of all, fear and greed is in the neutral zone now with a 12-point gain since yesterday. And sentiment update came out as it does every Thursday for AAII, which is retail investors. And despite the nice week we had, bulls actually dropped to 20.9. Neutral dropped as well. Bearish ticked up to 59. Kind of amazing. This is kind of offsides here and has been for a while. But again, we've got it highlighted in green because it's uh, an indicator that you want to go against. It usually the retail is wrong forever, so a contrarian bullish signal there. NAAIM, this was at 40 last week, which is on the low side, and we did bounce up 19 to about a 60 reading here. When this gets up to 100, it signifies tops below 40 is fairly reliable, putting in short-term bottom. So we'll be paying close attention to that. The news on the day, as I said, Apple and Amazon, or no, M&M led the market higher today, but after hours, Apple and Amazon down slightly. That's leading the indexes lower after hours. Friday morning, we've got the non-farm payroll report. Fed will be paying big attention to that. Keys coming into today, S&P and the NASDAQ against the 21 and the 50-day. firmly above the 21, clearing the 50-day. So green arrow there. Also, that 5,500 level is below, beneath, it's between the 21 and the 50. So we're still concerned about that as that was the resistance level. We're still above there, closing at 5604. And the data and earnings reaction positive on the day. Day count 7 days up now, getting a little overheated. 7 days above the 8-day moving average, 6 days above the 21-day moving average. Our short-term expectations remain positive as long as we stay above the 21 on the S&P and the Nasdaq. Sectors today, software and oils led to the upside, to the downside, home builders, financials, basic materials, staples, and healthcare, as well as biotech, and as we previously mentioned, gold and silver stocks. Will track Grow and Turbo holdings and changes going forward every day now. GROTECTION added to SPLG and bought Hood, 0.74% adjusted beta. 1.0 is the equivalent of having your entire portfolio in the S&P 500 for comparison's sake. Uh, Balance at risk, 2.6% to the downside. TurboTection bought ETHA, that's Ethereum ETF, and also Hood, adjusted beta 0.49%, 3.92% to the downside. Let's take a look at that ETHA chart before I forget. And tight action above the 21-day, still into the declining 50-day moving average. We'll talk a little bit more about this on the podcast tomorrow for what the thought was for buying that. Bottom line on the day, as we said, Microsoft and Meta earnings led big tech. S&P 500 and Nasdaq cleared their declining 50-day moving averages. Keys we're watching for tomorrow. S&P and Nasdaq still against the 21, the 50-day moving average, S&P against the 5,500 level, and the reaction to non-farm payrolls, and see if the Apple and Amazon reaction improves at all during the day. Okay, we'll go through the entire 20 of the 21 over 21. We'll start with what we own. Netflix continuing to just make higher highs every day, due for a bit of a pullback, but we've been saying that for a while now, and it's not giving it. So certain relative strength certainly there along with price. Palantir, rare pullback today after 1, 2, 3, 4, 5, 6, 7 up days. They've got earnings next week. GE Vernova gapped up as this was on the news that Meta and Microsoft either reaffirmed or raised capital expenditures. Uh, this a data center alternative energy play. CrowdStrike continues to move higher, acting well. Uber made a higher high and then pulled back. Also earnings next week there. CRS, this was up, another steel alloy ticker, which the ticker escapes. Oh, it's ATI. Had a good reaction to earnings and gapped up and held the gap on above average volume today. So finally closing back above the pivot there. Not the case for Penumbra, which we're not making any progress on. Close to the chopping block for this one, down slightly, still above the pivot from the double bottom base. And we added Hood today in the morning. It looked like it put in a bottom and it was accelerating higher. Let's go to the 5-minute chart. We bought it after this move up, but then made lower highs and lower lows into the close. So there was some selling going on for Hood. Tight stops as usual with this. It won't get below the 21-day moving average and still have us owning it. Next up, Bitcoin. We already looked at that, making a higher high. So Spotify looked like it had a shakeout on earnings, a higher high yesterday, a tight inside day today. This is really acting well. Looked like everybody that wanted to get rid of it did get rid of it. They did miss on earnings and they didn't raise guidance, but they are raising prices overseas. So this stock continues to hold up very well, and it's one of those subscription names that's not impacted by tariffs. Boeing hanging right above the top, the pivot of the double bottom base. Guidewire made a higher high and reversed. Chewy down a bit, sitting right on the 8-day moving average. Zscaler, higher high and then reversed, but still closed positive. Take Two, higher high and a positive close as well. The rest of these, the next six, have earnings next week, so probably won't be buying them, but we'll be watching them as they're sound bases. There's Dash with the double bottom, GGTX making higher highs, TKO, nice base, Carvana making higher highs, and LNG pulling back for the second straight day, but still holding the 21-day moving average. So that's your 20 over the 21. Let's look at WGS, which we cut today. We only cut things if they severely break below the 50-day moving average. We didn't count it yesterday. Somebody made a smart comment in that we should have counted it. But why? What's the point? We're not trying to prove that we can make a fantastic return when we show the 21 or 21. What we're doing is showing the strength or weakness of overall leading stocks. You don't include something that is skewed to the downside because it skews the average, and it made a lower low today. And if we've done it with big moves up as well, we've taken them out of the equation for the day, trying to get a better fit, a better idea for what the average stock, the average leading stock did on the day. So FYI there. And that is going to wrap it. As always, we'd like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Both our flagship GROTECTION portfolio and our newest offering managed by Ted and Connor, TurboTection, designed to grow assets during uptrends, get the heck out of the way during downtrends. We detailed every day of the week how we were getting defensive and then how we re-engaged. And now, you can see we've made some gains off of the lows, and we're watching this key level against the 50-day moving average here as it's declining. We don't want it to be declining. We want it to flatten out, turn higher, have the 8 and the 21 come up above it, and then get through the 200-day moving average. Those are the last four steps that we need to go from bearish to bullishly configured. That's part of our system, common sense system. If you like it, reach out to us. We'd love to talk to you. And with that, I will wrap it for Thursday, May 1st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.